Okay, data centers, I guess now they're described as mainstream investment assets. What's changed in the past few years that's pushed them? I guess once upon a time they were a sort of niche play, and now they're sort of core for EMEA real estate and infrastructure strategies. What's going on?
Thanks, Philip. And you're absolutely right. So data centers have always existed. You know, most countries have had their origins in telco facilities and retail data centers. But you're right that they are, as an investable asset, they are now much more mainstream, and that's for a few reasons. Principally, because of a massive explosion in demand for artificial intelligence, but also for cloud computing, and also because of the way that governments and nations are now treating data centers. So in the UK, for example, they are now classified as critical national infrastructure, and the development of them is supported as such. So those are probably the two kind of major factors that have driven the sector explosion over the last few years. And you know, those of your listeners who have read the report will know that data centers now account for just over 30% of global capital raised. So that's you know, really supporting that sentiment.
Yeah, and I think it's the 2026 Global Investment Outlook report. It shows just to sort of add to that, the data centers accounted for 31% of global capital
Mhm.
raised in
Mhm.
Q1 to Q3 2025, up from around 15% historically. So that, I mean, that's a pretty spectacular increase in terms of the investor allocations. Um, you say AI, anything else driving that? Is it just the digital world's expanding, so or just anything else that might be going on with that
Well,
increase?
I think it's of course the digital world expanding itself, and AI adoption is being driven by a huge capex needs. So, but that's only one part of the coin. I think the other part is that a lot of real estate guys are moving into digital infra world, and a lot of infra usual suspects moving also to the digital world. And that means that corporate and private equity interest is enhancing by the time we speak. A lot looking for digital returns with very with a strong income durability, and that operates in a counter-cyclical way that is not the typical real estate way that they are used to. So lots of capex needed, very capital intense digital world here, and that's being combined with long-term incomes with very low risk profile assets that's driving a lot of capex into this wall.
Okay, and the US, I guess, remains the most mature market in this area, but EMEA investor interest is accelerating. Are there any particular European markets that are proving particularly attractive? And if so, what are the things that are making them stand out at the moment?
Um, so for Europe, we have always referred to the most mature markets for data centers as the FLAP-D markets, meaning Frankfurt, London, Amsterdam, Paris, and Dublin. You know, of those countries, UK, Germany, and the Netherlands are definitely the most active at the moment, or showing the most activity, and that's principally because they are very connected, i.e., they have existing cloud regions for the cloud computing for the hyperscalers, the Microsofts, AWS, etc. of the world. These countries also have very strong regulatory frameworks, which I mentioned earlier. If you have the government support and policies in place to support data center development, it absolutely does help in driving that through, and to some extent protecting against the lack of understanding that we sometimes see when there is big NIMBYism or sort of community opposition to data centers. So it's more likely that you have you know, an educated audience who understand what economic growth this brings to an area, let's say. Um, and they also have access to skilled labor, which is a real issue at the moment. So um, you know, we are not seeing heaps of activity in sort of the far-flung reaches of the Nordics. the Nordics is a great market, but and the same is true of some locations in the UK and indeed in Scotland. You need to have access to skilled labour who will not only construct but operate the data centre once it's built. So those are the key kind of markets where we're seeing lots of activity at the moment. There's also been a huge amount of growth across Madrid and in particular Milan recently. And I think it's fair to say that over the last 6+ months, interest is also really picking up in Central Eastern Europe and the Middle East for different reasons. But those are definitely on the radar as the emerging markets.
Okay, and power availability and grid capacity are very critical, increasingly critical, when it comes to data center sort of location. How much are infrastructure and energy considerations shaping site selection and investment decisions? I guess how critical is it becoming in that investment decision?
I really think it's the most critical part. I mean, at the end of the day, this is a power business, and you need to provide certainty to the data center operators. How are you going to get power, and when are you going to get power? And if there is an uncertainty on or any risk about how to approach power, the underwriting of the project changes dramatically. Okay, and it is not only a question of when how I'm gonna get power. That's critical for sure, but also of how much is that power is gonna cost me on the rack. So because at the end of the day, we are used to talk a lot about how expensive or cheap is power at generation. And it's linked to renewables or gas, etc. But at the end of the day, what matters most to these neo clouds or data center operators is how much are they gonna pay on the rack, And so you need to add to all the generation costs, all the taxes, tariffs, etc. that are applied to the sector. And at the end of the day, that makes some winners and some losers. So there's two factors to be considered here. How are you gonna get the power? When are you gonna get power? And if there is any uncertainty about it, how much it's gonna cost that connection? But when that's finished and you need to come up with a P&L or a business plan to be developed, it also matters a lot. How much are you going to be paying, or how much is your client going to be paying for that power in the long term? Those two factors are critical when you try to underwrite a data center project.
Okay, and also, I mean, adding to that sort of landscape, in the major hubs, you mentioned the FLAP-D markets, there are some development constraints slowing new supply. Other ways in which investors and developers can adapt to those limitations, or do they, what's going on, and how can, that be the planning restrictions, for example, be addressed?
It's definitely a live concern, and I think the way it plays out typically in the sector is it's increasingly hard for new market entrants to land in these places without, for example, doing a merger acquisition of an existing operator who has presence there. So generally, we're seeing those who are most successful are those who have the existing footprint in those markets that are super constrained, and therefore the existing relationships with not only the local governments but also the supply chain. And that's because how they solve for it tends to be really energy intensifying existing sites. So data centers, it's very common to do a phased build out. Sometimes that can be through on-site self-generation of power rather than grid connections. For example, in places where there is a power moratorium and you've really got no other alternatives. And then as Gonzalo kind of mentioned earlier, it's all about your speed to market. So rather than a traditional vertical build that we may have seen a number of years ago, where you do have some extra power or you are able to self-generate, we're seeing a lot more modular development. So that allows people to stand up data centers pretty quickly to provide more immediate supply, which in these places where there's typically very, very low vacancy rates gets hoovered up nice and fast. The other alternative is sort of they don't. You may have to make a choice not to play in these metros anymore. Amsterdam and Dublin probably being two of the ones that have the most scarcity, and in that case, capital flows are rerouted to secondary markets or more remote locations. And I think this is writ large in London, where traditionally you had the Slough estate cluster, we had the Docklands cluster, and gradually the supply and demand has moved further and further west outside of London, to the extent that Newport and Cardiff are almost considered an extension of the London metro themselves. So that shows you kind of the shifts that are taking place.
Okay, and maybe partly for that reason, but I'm sure there are others as well. We are seeing growing interest in whether you call them secondary, tier two emerging markets. I think Southern and Eastern Europe in particular, but I think the Middle East is clearly they're looking at it as well. What are the particular opportunities those locations offer, and are there any particular risks associated with them?
Well, yeah, places like Lottie was saying before, places like Madrid, Milan, Warsaw, Marseille are closing the gap between themselves and FlapDis. The main opportunities there are greater land availability, so this kind of places got great availability of land. There's strong, depending on the region, but some government-backed digital infrastructure programs, which helps a lot development in places like, for instance, in Aragon, which is being created a great digital hub for hyperscalers. We do have in Southern Europe and Eastern Europe lower operating costs and attractive incentive for labor, which is a strong bottleneck for the activity right now also. So these are the main opportunities there, and of course, power is not as as packed as is in FlapDis market. There are issues about power. There are also queues, and you need to prove that your project is feasible and deliverable in a medium term. But power is not as constrained as in FlapDis market. Main risks on these regions are pretty same as the FlapDis. There's regulatory maturity, so we need to think where we want to be in Europe and in EMEA regarding digital infrastructure. We are just in the middle between the States and China, so we need to know where we're gonna be. And in this Southern Europe and Eastern Europe, there's still to prove a long-term demand coming from the big guys, the operators. That's, I think, the most risk or the challenge that matters most for this location in the future. But we are pretty happy with the activity on those locations. We are seeing a lot of demand coming into the way, and it's really how the supply can match that demand in the medium and the long term.
Okay, and platform investments and joint ventures seem to be becoming more common. Are there any particular reasons why investors are favoring those strategies over what we might call the traditional asset by asset acquisitions?
Yeah, there's a few reasons, and I think the backdrop to this that we can't forget is that data centers as an investable asset is very much now out of the shadows and into the light. And set against that backdrop, you no longer have parties who are buying, let's say, agricultural land making their own power applications themselves, and then selling it down the line. Everyone is so now acutely aware of the potential upside for this asset class that those deals are simply not there, and for good reason. So we're definitely seeing a lot more platform investments and JVs, I think principally because you're looking to share downside risk as well as upside return. So typically people are not landowners, for instance, if we start there, are not looking to trade out without realizing some of the data center repurposing value, let's say. That's from the land side. And then from the operational asset side, of course, buying a historically retail co-location operator provides an investor with massive speed and scale to market. Some of these groups, beside the globally known ones, have been domestic only for a period of time, have therefore those great networks with the power companies, with the local government that one can use to really get scale fast. So we're seeing it both from a risk and upside sharing, but an access and a speed to market sharing. I think the other point on that, and I touched on it earlier, is access to talent and operational teams. So the deals are very hard to do, and the operational teams who work inside those data centers know the risks, challenges, know the customers. They are an extremely valuable resource, and we can't forget the human element of data centers. So access and acquisition of those operational teams is a very big reason for entering into the market in that manner. And it's been very successful for a number of people. Across Southern Europe, we've seen data center operators collaborating with logistics developers. We've seen infrastructure funds who have great experience in toll roads, airports, entering into the space. People bringing a whole host of kind of transferable knowledge into the sector to go big quickly.
Okay, and one other aspect, or couple, I suppose, sustainability regulations are here and are potentially only going to increase, and then planning complexities, as I think we touched on earlier. The two fairly major challenges for the sector. Are there any particular ways that data center developers are managing to balance? Because speed to market is obviously critical, but they also have these sustainability and sort of compliance requirements. So how are they balancing those two possibly slightly conflicting demands, if you like?
Well, I think data centers are and data center operators have been front runners in sustainability for the last several years. I mean, if you check annual accounts of every single data center operator, they dedicate tons of pages to explain how do they manage sustainability. So these are one of the main players that think about how can they adopt high efficiency designs. They use modular construction techniques to shorten timelines and while staying compliant. They invest in a lot of energy resilient solutions, such as they come up with private substations, green power PPAs. I mean, this really matters a lot to them. I think that try to deliver capacity without compromising compliance have been in recent years one of the main objectives, main aims of the industry, and they are doing very, 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 very well. I mean, other techniques that they are looking for is try to engage very early with power planners and utilities to try to streamline environmental approvals. So sustainability regulations are very, very strict with data centers since the very beginning, and they're very aware of it, and they try to come up with solutions on a daily basis. For instance, if you check facilities 30 years ago, they used to use water right now, most of the data centers that are designed, they are a closed cycle with water, so they are much more efficient, and they are very energy resilient. So this kind of example shows that the industry is going the right direction to try to fulfill both of compliance coming from the legislation and the public administration.
Yeah, and we sometimes get asked about the potential for future obsolescence in data centers, especially when hardware is advancing at such a massive pace. So, as Gonzalo mentions, the cooling technologies principally are really important for data centers, and we're seeing lots of sustainable innovation in this space, which is fascinating to watch and to be a part of.
And in terms of looking to the future, are there any particular things you think that'll separate successful data center investors in the EMEA market in particular from the rest over the next few years? And what do you think are the hallmarks of
Mhm.
a good investment strategy as opposed to one that maybe won't be as successful?
Yeah, the million dollar question. I think based on our conversation, we can sum it up with the three Ps. The three Ps being power, platform, and place. So the most successful investors will be the ones who secure scale power early, and really leveraging those national, for example, grid connections, as that's the principal defining constraint in EMEA. And at the moment, we're seeing a lot of focus on sites with power that lands prior to 2030. Because beyond that point, we anticipate there will be more stock coming to the market. So P for power is always going to be your first point. Secondly, platform. We've spoken a bit about your access to talent, that, and not only the operational platform or the operational capability that your team has. So those investors that have deep sector knowledge or are willing to outsource that, ideally via Colliers, to help them in their investment decisions, because not all locations are equal, not all power connections are equal, and it's important to quickly get under the skin of the deal that you're looking to do. And the final P is place. We've spoken a bit about locations. It's definitely fair to say that probably had we been having this conversation 18 months ago, there was a return of focus to the core, to the FLAP-D markets, because there was some concern about how the hyperscalers might treat new or more emerging markets. But what we would now say, sort of 18 months on, and this industry moved very quickly, is that those investors and in-turn operators who can provide a platform across the established and the emerging markets will have the most success. There is value and there's trust in brand names when customers are looking to make decisions about where to be placed. So power, platform, and place are my top three for success. And using the Colliers platform, we'll have to get in a little sell at the end.
No, that's fine. And in addition to that, and this is probably one that's less easy to address, is it fair to say, I mean, everyone's talking about this AI bubble, which is driving a lot of the data center expansion. As far as it's possible, do people need to try and understand what's going on with AI as to whether, the predicted capacity is likely to materialize, or if everyone's chasing the sort of same business, and then you've got the potential rollout of AI inferencing and sort of edge data centers? Just your thoughts as to how much people need to try and understand about the AI market, if that is indeed possible.
I mean, well, we should all absolutely be teaching ourselves as much as we can about AI, using it as much as we can. But I would say crucially for data centers, really understanding what the revenue bearing side of AI is, whether that is through advertising, how people are paying into those platforms, because that then becomes the workloads that has revenue attached to it that needs to sit in a place. But yeah, every day is a school day when it comes to AI. Gonzalo, what are your thoughts?
Yeah, no, I was gonna say that the discussion of there's a bubble, yes or no, it's gonna depend of the term that you're seeing. I mean, the short term is gonna be winners and losers for sure. This is a new new digital world, and the AI has just started. That's the way it is. It's just being implemented on a daily basis by the population. But I'm pretty sure that in the next years it's gonna be much more usage from the corporates on their daily basis, and that's gonna change the shape of our daily work 100%. So in the short term, of course, there's gonna be winners and losers. In the medium and long term, it is not a question if it's a bubble. It's just digital world. It will continue growing. I mean, that's the way it is. And taking the last point Lottie was saying, in this kind of world, uh, you need to have three things to be successful as an investor. Either you have, and if you got two of them, there's no problem in getting the third one. I mean, you need to have a good team, you need to have power, and you need to have equity. And if you got any of those two, you can get the other one, you know? So that's how we see the future, and hopefully we could gonna be able to help investors through Colliers.
Excellent. I mean, it's been great to chat to both yourselves, Lottie and Gonzalo. So appreciate the insights and thank you very much indeed for your time. Thank you.
Thank
Thank
you.
you, Philip.